Welcome back to the Wall Street Podcast. You've asked us to dig into Citi Research's latest report on the China internet sector, and, well, we're here to extract those key insights for you. We're diving into their 2Q25 wrap and 2H25 outlook, AI multipliers, and revitalized platform traffic, which just came out yesterday, September 3rd, 2025.
That's right. And this report, it really unpacks the sector's performance, looks at big trends like AI integration and the pretty fierce quick commerce competition. It also gives a clear outlook for the second half of this year. It covers financials, market sentiment, key developments, e-commerce, advertising, gaming, travel, logistics, the works.
Okay, great. So let's jump right in. The report says the China internet sector's performance has been, well, remarkably robust, actually leading globally. What kind of numbers are we talking about, and how exactly is AI playing into this trend?
Yeah, the performance is quite striking. We're seeing a sector return of plus 44.8% year-to-date 2025. That's outperforming other major regions, SEA, Japan, US, Korea, India, and a primary driver. It's clearly what the report calls the AI multiplier effect.
AI multiplier effect. Okay.
It's enhancing monetization, particularly in advertising and gaming. Think better targeting, more efficiency. Right. You've got Alibaba Cloud reporting triple-digit AI-related revenue growth for 8 consecutive quarters, actually.
8 quarters. Wow.
Yeah. And Tencent Cloud also noted significant growth in business services, largely driven by AI, GPUs, and API usage. Baidu AI Cloud 2 accelerating its enterprise side. So companies that are really strong in application development, big data, user targeting, they're definitely well-positioned now.
Okay, phenomenal return, clearly fueled by AI. But the report also flags this intense competition in quick commerce. Record-breaking, it says. Can you elaborate on the scale of that investment? And what are the sort of immediate impacts we're seeing?
Oh, it's huge. Ali, JD, and Meituan collectively spent somewhere in the range of RMB 90 to 100 billion.
Billion, with a B.
Billion, yes. On user subsidies just for food delivery and quick commerce, basically from Q2 through August. Now, that definitely hit short-term profitability for the platforms, no doubt about that.
You'd expect so.
But it also led to this massive revitalization in traffic. Quest mobile data for July showed Taobao's MAU up 7% year-over-year, Meituan up 11%, and JD saw a jump of 20%.
20% for JD, that's substantial.
It is. And it's not just MAU. Daily active users, time spent, those metrics also saw encouraging growth. JD's time spent was up, get this, 76% year-over-year.
76%. That's almost like a financial arms race driving engagement, isn't it?
It really is. A huge bet on capturing user habits.
So given these dynamics, the AI boost on one hand, this massive quick commerce spends on the other, how is investor sentiment shifting, and who are the top picks for the rest of 25?
Well, the focus is definitely rotating. Investors seem increasingly interested in companies with strong AI stories, strong AI theses, and even though some valuations have rebounded a bit, many of these internet companies still trade at a discount compared to their global peers.
Okay, so potential value still there. Who does Citi like?
Top picks mentioned are Tencent and Alibaba. They're positioned as the core AI plays. KDD is highlighted as a high beta long position.
High beta, so more volatility, potentially higher return.
Exactly. Then you have Trip.com and Full Truck Alliance, noted for resilient growth and market penetration in travel and logistics respectively. And for an A-share selection, Century Huotong gets the nod.
Got it. Okay, let's maybe circle back to AI for a moment. We see the cloud growth, but how specifically are these internet giants using AI to, boost the bottom line in their core businesses beyond just selling cloud services?
Right. Good question. It's really permeating everything. AI is improving advertising efficiency quite a bit, better targeting, smarter ad creative platforms. Tencent and Weibo data points to this. In gaming, it's shortening development cycles, which is huge, and enhancing the player experience. New titles like Tencent's Valorant Mobile, NetEase's Destiny, Rising, they showed strong initial performance, likely helped by AI in development and operations.
So faster time to market for games.
Faster time to market, potentially better games. And it's also improving e-commerce transaction conversion through smarter product discovery and personalization, helping you find what you want faster.
Makes sense. Now back to that quick commerce subsidy war. RMB 100 billion is a historic level of investment. What's the expected long-term structural impact here? Is this sustainable or just a land grab?
It's definitely a structural shift, not just a temporary spend. The report projects quick commerce could capture, say, 10% to maybe low teens percentage of the total e-commerce market long term.
10 to low teens percent. That's significant.
It is. And this aggressive investment, it helps platforms acquire new users, yes, but also critically drives purchase frequency. It particularly benefits companies that have a strong mix, traditional B2C, quick commerce, offline presence, plus robust supply chain capabilities. It really pressures competitors who can't match the speed and investment.
Right. It raises the barrier to entry,
Yeah.
essentially. Beyond these big tech shifts in AI and commerce, are there any other maybe regulatory changes or consumer trends shaping things in the second half, particularly in areas like entertainment or online services?
Yeah, a couple of interesting points there. One is potentially relaxed regulations for drama content production. This could mean shorter review times, which helps cash flow for producers and video platforms like iKey,
Okay, last bottleneck there.
possibly. There's also mention of a new tiering system for artists with uh, bad images, which might allow some previously suspended content to be released eventually. Still unclear how that plays out, but it's notable. On the consumer side, offline entertainment demand seems solid, and online recruitment sentiment is improving, seeing a more balanced recovery across different job sectors.
Okay, interesting regulatory undertones there. So let's bring this down to the ground level. For the general public, for you listening, what does all this mean? The quick commerce part seems obvious. More convenience, maybe lower prices.
Exactly. The competition directly translates to more accessible and affordable daily stuff. Users are effectively getting the report estimates around RMB 30, 3 in subsidies per month.
$30 a month back in your pocket, effectively.
Pretty much. And it also creates more employment opportunities for delivery riders, which is a tangible economic impact.
And the AI side, how does that filter down?
Well, the AI advancements in ads and gaming should mean more personalized, relevant experiences for you. Better recommendations, maybe higher quality, more engaging games and entertainment. Combine that with potentially relaxed content rules, and consumers could see a richer, more diverse mix of digital content, video, music, games, improving those daily digital interactions.
So the China internet sector is clearly still evolving rapidly. You've got major AI integration happening alongside this fierce competitive spending.
Yeah.
The big question for investors, and maybe for the companies themselves, is how these powerful shifts will rebalance market leadership and ultimately redefine long-term value. It feels like the ground is still shifting.
It absolutely is. And really understanding that interplay, the tech innovation, the aggressive market strategies, the shifting regulatory sands, that's going to be crucial for anyone navigating this landscape going forward. The digital future there is still very much being written.